Well, thanks so much for tuning into the Market Wrap. I'm Niraj Shah, and it turned out to be yet another very interesting day of trade, simply because banks again are not buckling down, or maybe they're coming off a little bit, but Reliance is starting to contribute in a meaningful way, and that therefore adds to the gains for the markets. Remember, we've been talking about it all day or all through the trade setups every single day, that the key monitorable is the stock price of is the level of the bank Nifty, because Reliance and IT don't seem like they're going to have too much of a correction, simply because they've corrected a little bit in the recent past already. So that's the key thing when it comes to the entire setup. And today, I think everybody contributed almost equally. Let's get the Nifty 50 up on your screen and show you what's moved and what's not in the session today. So you had Asian Paints up 3.5. There was some strength in insurance companies for sure. SBI Life, HDFC Life, both of them gaining in the session today. I think iPro also had a decent outing. ONGC marginally higher, L&T marginally higher, Titan marginally higher, but there were some gains to each of these. What didn't do well? Well, M&M, a bit of a pullback after the massive run that it's had. So autos, by and large, today had a bit of a pullback. It'll be interesting to see what happens over the course of the next 2 or 3 sessions. But the start of the week hasn't, at least today, hasn't been particularly great for the auto names. And Divi's yesterday corrected post results, despite the strong commentary. Today corrected a bit further. So it's very interesting that while some of the other API companies, Newland, etc., are all doing well, Divi's has been a bit sore after the run-up ahead of the numbers. Maybe some profit booking post a very strong quarter. Well, Nikki Johnson, to talk about the large cap name that stood out in trade today. Nikki, good afternoon.
Good afternoon, Niraj. Tata Steel, the stock has run up like 16%, 17% over the last 6 sessions. And today, you witness some amount of probably the stock took the breather, or probably some of the investors or traders booked their profits from the counter ahead of the earnings. In terms of what we expect from the earnings, the revenue is set to rise at a 7-quarter high, and the EBITDA is expected to be at least at a 9-quarter high. That's the number that we're looking at. Revenue, is seen probably up by 10 times, EBITDA more than 2.3 times. Margin is expected to be at 21% as compared to 10%. So clearly, a net profitable situation as compared to the net loss that the company registered in the corresponding quarter. So clearly the domestic realizations, the HRC prices, all of them, some amount of cost rationalization, all of them is expected to aid the earning performance of Tata Steel, which has been on uprun like for most of the steel stocks. Beaten likes of all of them. So I wouldn't be typically surprised with a good show coming in from Tata Steel. But what I would like to keep an eye out will be the kind of deleveraging that the company undertakes at this point of time, the capex plan, especially, what happens with the European division right now after SSAB is abandoned the talks with that European unit. So we'd like to watch out now. How does this whole European stake sale process goes on further? So that is one, clearly some amount of traction that we have seen in Tata Steel. 17% in the last 6 trading or odd session, but today some amount of profit booking. What are you picking up, Niraj?
Well, it'll be interesting to see how the market breadth has behaved today. Remember, yesterday was a day of fairly decent outing on the market breadth front. But today, too, I reckon that it would have stayed true, simply because the large cap end of the market was anyways doing well. Well, unfortunately not. 184 advancing to 317 declining. So a clutch of stocks actually came off. And while Nikki will highlight them individually, just look at the losers there first. BKT right up there. CapEx plans announced by the company, making the street a bit nervous. 10% lower for Balakrishna. Yesterday is amongst the top gainers in yesterday's session. NCC down about 9%. The very interesting thing the last few days that is happening is that companies that are being bought on expectations of very good numbers are getting whiplashed, really, because you had Balakrishna, you had Sun TV and some of the others, all of which corrected. Sun TV, by the way, was an FNO ban, else the cuts could have been even more meaningful. What did do well? Some gains for IIFL Finance again, so it's back to winning ways. Future Retail, Future Consumer, all of the Future Group companies on account of the, I think the High Court judgment yesterday, and some strength for Amber Enterprises, trying to mirror its cousin Dixon. Amber up about 6% in trade today as well. And Indus Towers, by the way, 5% higher. I don't know if the MSCI rebalancing brings that company also in focus, but let's wait and watch. Nicky, what names stood out and why? I mean, there were a bunch of these names that cracked and a bunch of these names which went up as well. What are the reasons?
I actually agree with you when you say that most of them who've been gainers have actually taken a big hit. Case in point being NCC. We saw that solid uprun coming in the counter, and just ahead of earnings, you see the profit booking probably taking place. That was also the case for Tata Steel. Having said that, I'd like to highlight Balaji Amines, because that is one stock which hit a record high as volumes were probably sharper in Q3. Look at the results. Revenue up 72%, EBITDA up by more than 174%, net profit at 75 crore as compared to 23 crore. So clearly smart set of numbers, right, for Balaji Amines. Apart from that, Torrent Pharma. Now there the numbers were quite lackluster, especially so to say for the top line performance. Just a flattish growth, 1% kind of an up move, barely anything. EBITDA up 12%, net profitability too rose, but then was still more or less in line with estimates. So not like a splendid performance coming in on that counter. And of course, the top line, which was just flattish on account of the drag, which came in on a 24% decline in the US business sales, which contributes to a 15-20 odd percent, clearly was one of the factor which led to some major drubbing coming into the counter. Apart from that, what are you picking up? Any stock that you like to keep an eye out on apart from Tata Steel? Because I know that will be clearly one of the newsmaker for tomorrow.
No, I think it will be interesting to see what happens to Bharti, Indus, as well as HDFC Life on account of this whole MSCI thing. So I think that's one pocket that everybody would be watching out for meaningfully. And let's wait and watch over the course of the next few days. I think it'll be interesting to see what some of the capex-oriented stocks do after the flare-up post-budget. Can they have some cool-off? It'll be interesting to see. Nicky, what about you, though? Any stock that one should watch out for? And what about the global markets as well?
Sure. Apart from Tata Steel, I think Hindalco will be on my list. Tomorrow, the company will be coming out with numbers. Now, do remember that Novelis reported solid set of numbers, and typically metal stocks have had a good run in this quarter. So we're expecting the same kind of up move even from non-ferrous space. And of course, Hindalco is an obvious beneficiary to that. At this point of time, just like Indian markets, global markets, sure.
Nicky, sorry, just one question though, before we move on to the global markets. What is that one, since we're talking about results, what is that one moving factor in Tata Steel or Hindalco that people should watch out for? Would it be the EBITDA? Would it be something else? What is that one number people should watch out for?
EBITDA per ton. That's always the case when it comes to metal companies, because we'd like to see what kind of unitary performance operationally the company has driven. That's one important factor. Case in point today, NMDC, for instance, the EBITDA per ton was the highest that we saw since Q1 of 2013. But when we spoke to the management, we realized that probably the same EBITDA per ton couldn't be replicated or wouldn't be replicated, because iron ore prices are moderating at this point of time, given the kind of correction which is taking place in international markets, and so to speak, also the ramp up in Odisha. So that's of course one quick factor that we like to give out.
Sorry. Yeah, please finish your point.
No, apart from that, also, for Tata Steel, it remains to be seen how the deleveraging process pans out, especially the European unit, because there were a couple of talks which were happening in between but didn't fructify. So really that will be a pressure point for this company.
Okay, but do you think that Tata Steel's EBITDA per ton number could be healthy?
Yeah, it could be at multi-quarter high, just like most of the steel companies. So that's a record high for some. In fact, for SAIL, it was at record high. And we're expecting same sort of trend even playing out for Tata Steel as well.
Okay, cool. What about the global markets?
Yeah, sure. At this point of time, Niraj, European market is trading pretty flattish with negative bias, that you'd say. US stock futures also are pretty lackluster. It seems to be a day where markets are just about consolidating their gains. Although the energy sector has outperformed, helped by some positive news from oil giant from European markets, but net, the overall sentiment seems to be a little tepid, I'd say, at this point of time. But this is all that we have for you at this point of time. Thank you so much for tuning in.